Despite strong DII support, Nifty's breakdown level of 24198.58 looms. Get ready for today's market action on Trade Vision pre-market report. Good morning, traders. Welcome to Trade Vision pre-market report. Today, 2026, July 21st, Tuesday, brings another vibrant, warm day of opportunity. It's Nifty expiry day. Let us deep dive into the detailed reports. President Trump has announced new 50% tariffs on a broad range of Canadian goods, including autos, alcohol, and dairy products, citing discriminatory practices against U.S. commerce. While energy and critical minerals are exempt, this move, effective in 30 days, heightens global trade tensions and could weigh on sentiment for export-oriented Indian sectors, potentially impacting manufacturing companies reliant on global supply chains as inflation risks rise. Geopolitical tensions have sharply escalated in the Middle East, with the US-Iran ceasefire collapsing, leading to vessel interceptions in the Strait of Hormuz and attacks on a Kuwaiti oil facility. This renewed instability has propelled Brent crude above $90 a barrel, putting the spotlight on import-dependent Indian sectors like energy and transportation, and leaving room for broader inflationary pressures across the economy. Moody's Ratings reports the global economy is entering a new macro regime, signaling an end to the era of cheap borrowing with structurally higher interest rates and elevated geopolitical risks. This fundamental shift implies a prolonged period of higher financing costs for businesses and governments, potentially leaving room for re-evaluation of long-term capital-intensive projects within India's infrastructure and manufacturing sectors, while also highlighting opportunities in AI-driven investments. Escalating US-Iran tensions have propelled Brent crude prices above the $90 per barrel mark, putting pressure on India's import bill and raising inflation concerns. This geopolitical uncertainty has seen the Indian rupee weaken to a two-month low against the dollar, potentially weighing on import-heavy sectors and suggesting continued FPI outflows. It places the spotlight on energy and oil marketing companies. First quarter earnings from major private banks are highlighting profitability pressures, with HDFC Bank, Axis Bank, and Kotak Mahindra Bank experiencing declines due to concerns over net interest margins. This could weigh on investor sentiment towards the broader financial sector, although some resilience was observed in ICICI Bank, leaving room for selective stock picking within the private banking space. Middle East geopolitical risks have intensified as Houthi rebels declared a maritime embargo on Saudi Arabia in the Red Sea, compounding existing disruptions in the Strait of Hormuz, where shipping has largely stalled amidst escalating US-Iran conflict and a ship fire. Brent crude has surged above $90 a barrel, which could weigh heavily on India's import bill and fuel inflationary pressures, putting energy and logistics sectors in focus. The Ukraine-Russia conflict has seen renewed intensity, with Russia launching massive missile and drone attacks on Kyiv, while Ukraine retaliated by striking Russian oil depots, logistics facilities, and several Black Sea vessels. This continued disruption to energy infrastructure and Black Sea shipping keeps the spotlight on global commodity prices, particularly crude and grains, which may lend support to inflationary concerns for the Indian economy. Indian private banking heavyweights faced investor scrutiny following their Q1 earnings reports, with significant selling pressure observed amid concerns over net interest margin compression. This development could weigh on the broader Nifty and Sensex today, keeping the spotlight on the financial sector and potentially leading to a cautious stance from investors on rate-sensitive stocks. Global cinema chain AMC Entertainment delivered a significant Q2 earnings surprise, reporting a profit and record revenue of $1.6 billion. This unexpected turnaround may lend support to global consumer discretionary sentiment and puts the spotlight on recovery plays, potentially leaving room for optimism around Indian entertainment and multiplex operators today.
You are watching Trade Vision! Smash that subscribe and enable the bell button right now! now. Like and share this video. Come and show love and share your happiness. Let's win together.
Foreign investors sold over 1,121 crore rupees. Domestic institutions bought more than 1,312 crore rupees, largely offsetting foreign selling. This indicates strong local support, likely preventing a significant market dip today. If we look at yesterday's sectoral data, we see a clear rotation into Nifty PSU Bank and Nifty Consort Durable, both showing strong gains yesterday and robust weekly momentum. Conversely, Nifty Pivot Bank and Nifty Fin Service are clearly weakening, with money flowing out of these segments, signaling a shift for traders positioning for today's session. Let us look at global events. India's Consumer Price Index for June 2026, released on July 13, 2026, came in at 4.38% year-on-year, beating expectations of 4.30%. The Reserve Bank of India's Monetary Policy Committee will meet from August 3rd to 5th, 2026. The decision on August 5th will be crucial for Indian markets, as it will directly influence interest rates and liquidity, impacting investor sentiment and capital flows. The US Consumer Price Index for June 2026, released on July 14th at 6 p.m. IST, decreased 0.4% month-on-month, beating expectations. This cooling inflation could ease Federal Reserve hawkishness, potentially boosting foreign investment into Indian markets and strengthening the rupee. China's second quarter GDP, released on July 15th at 7:30 a.m. IST, grew by 4.3%, missing the 4.5% forecast. This slower growth signals a global demand slowdown, which could negatively impact Indian export sectors and overall emerging market sentiment. The Federal Open Market Committee meeting is upcoming on July 28th and 29th, 2026 Indian Standard Time. The interest rate decision is expected at 11:30 p.m. IST on July 29th. Markets anticipate a 25 basis point rate hike. Global markets showed mixed signals, with strong Asian gains contrasting muted European and slightly lower US finishes. Hong Kong and Korea led the positive charge, while London saw a dip. Indian traders may find some upside from broad regional strength. Now let's move on to some Indian listed stocks highlighted in today's news updates, drawing investor attention. Mahindra Logistics is in focus after reporting a significant first quarter turnaround, moving from a net loss to a profit of 27.83 crore rupees, with income up 23.5%. ICICI Bank also saw its shares jump 2.5%, following a strong first quarter earnings beat, leading to brokerage upgrades. Conversely, HDFC Bank shares fell nearly 5% post its first quarter results, despite analysts remaining bullish. Ultratech Cement reported a 17% rise in its first quarter net profit due to increased. Let's check what the RAS levels are indicating for today's Nifty. We see a breakout level at 242s unseen, with a breakdown level set at 241989. Should the market exhibit bullish momentum, key resistances are R1 at 24282, R2 at 24348, and R3 at 24414. Conversely, if the market turns bearish, watch supports at S1 24133, S2 24067, and S3 24001. Today's CPR ranges from top TC 24226, pivot 24213 to bottom BC 24201. Analyzing the options matrix and derivative distribution, indicating for the 2026 July 21 expiry. A significant pivot in max pain from 24,250 to 24,200, underpinned by a recalibrated put-call ratio at 1.351, down from 1.578. Signaling a range-bound directional bias, with major supply wall at 24,500 and critical demand at 24,200, suggesting institutional unwinding below 24,200 and short covering above 24,300, within the tactical range of 24,000 to 25,000. The India VIX is currently at 12.98, marking a 1.29% fall from its previous close of 13.15. This low VIX indicates low volatility, which can be a cautionary signal if Nifty is at higher levels for a potential fall. The 5-day trend is mixed. The CPR is positioned at TC 24,226, pivot 24,213, BC 24,201, expecting normal movements in the market today. GIFT Nifty opened at 24,133 compared to Nifty's previous close of 24,283. This represents a gap down of 151 points. Nifty 50 typically tracks this gap direction at the open, suggesting a bearish start to today's session, but confirmation is needed. The no-trade sideways zone is between 24,199 and 24,217, where market direction is unclear. A move above the breakout level of 24,217 could yield 189 points upside, reaching 24,406. Conversely, a breakdown below 24,199 could lead to a 128-point downside, hitting 24,071. Previous trading day, Nifty moved 48 points, showing a bullish sentiment. The weekly move was 48 points, and the monthly move was 341 points. The close did not sit tight against either extreme, indicating no strong directional carryover signal into today's session. And now, the moment you've been waiting for, today's final market verdict. We are seeing a mixed bag for today's session, with a slight tilt towards caution. The Nifty closed down by 0.39%, and the Sensex even broke down, losing 0.57%. However, Nifty futures are trading at 24,269, a healthy 30.5 premium over the index, which is typically a bullish sign, though the open interest shows long unwinding. Looking at options, the put-call ratio stands at 1.35, indicating a range-bound market with maximum pain at 24,200. We see strong resistance around 24,500 and 24,300 due to heavy call writing. Support is firm at 24,200 and 24,000. On the technical front, all major indices, including Nifty and Sensex, currently show a bearish bias on the RAS EMA trend signal, and Nifty is also below its 200-day exponential moving average. The India VIX, our fear gauge, has fallen by 1.29% to 12.98, suggesting some easing of fear. Domestic institutions have been strong buyers, pumping in 1,312 crore rupees, effectively absorbing foreign selling of 1,121 crore rupees. Globally, Asian markets are performing well, which could provide some uplift, but our own GIFT Nifty is indicating a 150-point gap down. Macroeconomically, rising Indian inflation is a concern, but cooling US inflation and strong Indian industrial production offer some relief. And that wraps up today's Trade Vision pre-market report. Don't miss a beat. Please subscribe to our channel and hit that notification bell for daily updates. If you found today's insights valuable, show us some love by liking and sharing this video. Your thoughts and advice truly matter, so please drop a comment below. Here's to a truly prosperous day ahead.